Trading environments. As we are trend traders, we only want to trade when price is trending. Most of the time price is consolidating, however. What else can price do? Well, not much. It can either trend or consolidate. And of course, if we have a range or consolidation on a higher time frame, it doesn't mean there won't be trends on the lower time frames. So if we find a consolidation like this, for example on the daily chart, and then you see this move up, you go down to the 5-minute chart, you will find many entries inside that trend, because markets are always fractal. Price most of the time is moving in a channel. That can be an expanding channel or a condensing channel or a symmetrical channel. For example, here we were moving in a condensing channel before we broke out. So the way we do this is we zoom out a bit like this. We can very quickly see the structure we are in right now. So this, for example, would be a condensing channel for me. This is what we are in right now, and inside that condensing channel can be other structures, of course. For example, this symmetrical channel, or if we zoom in a bit, we had this expanding channel. And then as soon as we can draw a downward channel, we are very interested in only trading this short. If we are in an environment where price structures like channels or wedges or whatever are pointing to the downside, then of course we go down to the M5 and we are looking for short entries. So for example, this was a vertical channel, but then we had these lower lows, and this turned out to be a flat triangle, and we are already in a downtrend. If these break out to the bottom, then you can expect a continuation move. The way we use all of this information is simply that we draw our trend lines, our channels on the higher time frames, and then we try to get in with the momentum in the lower time frames. So to summarize, we have channels, expanding channels, we have condensing channels like this one, we have expanding channels like this one, we have symmetrical channels, and we have vertical channels. Let's see if we can find one. This one here, kind of not perfect, but you get the idea. And once we know in what kind of structure we are in, it will be much easier for us to trade price in a certain direction. And usually price does two things. Either we will first go into a channel, and then this channel will break out and go into another channel, for example. Or we have a drive first, like here, then we go into a channel, and then we have another drive. So this is all price does usually. Either drive, channel, drive, or channel, drive, channel. And our job is it to assess whether we are in a channel at the moment, or we are in a drive, or we are in a second channel. And then this channel here transitioned into a condensing channel, also possible. And then into the symmetrical channel. So sometimes you have transitions from one channel to another channel. And important is simply you have these channels on your radar, and you know when we are at the top or at the bottom of a channel, and you have to know when we are in a vertical channel, then there's not much for us to trade. Once we go into a down trending channel, we want to look for short trades, and once we are in a up moving channel, we want to look for long trades. So for example, here we had a upsloping channel, and this could have been a viable long trade, for example. Then we broke out, retested it, and went into this drive. Then we went into this symmetrical downwards channel. So this could have been a viable entry short up here. back to this barrier. And of course, in hindsight, these are much easier to see. In real time, I suggest that after you have a drive like this, you connect the first two lows and then simply copy that trend line and make it fit the first high, and then you get a really nice reaction point. Like here, for example. And then you copy this up here, and then here, for example, would have been your take profit point. Of course, inside the channel you have other condensing channels and so on. So as I said, price is moving in a channel almost all the time, and because market is fractal, if you don't find a channel on the M5, you go to the M1, you can find a channel for sure. And important is just you are on the right side of the channel. It has to be pointing in the direction of our trade. And if we get a vertical channel, we are out of the game. If you break out of the channel structure and you retest it from the other side with the trend, these are also usually great entries to go with the trend. I hope this made sense. Practice drawing channels on your charts. They are actually much easier to recognize and to trade than you think. With a little bit of practice, these will become one of your best friends.